Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. You can join Brian Curtis and myself for the stories making news and moving markets in the APAC region. You can subscribe to the show anywhere you get your podcast and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
Tesla receiving in-principle approval from government officials in China to deploy its driver assistance system there. And a mapping and navigation deal was announced with Baidu. And also that Tesla has met some requirements on data security and privacy issues. Joining us now to look at this is Sarah Zheng, who is Bloomberg China technology reporter. But it's a little bit sketchy here on the details. What do we know and what are we waiting to learn more about?
Well, so what we know for sure is that Elon Musk had a very fruitful trip to China. It was sort of a surprise visit. We hadn't expected he was going to go. This unannounced trip where he met with Chinese Premier Li Qiang, who he's actually had a historical relationship with. And he came away with two main cleared hurdles for FSD, which is full self-driving. So to be able to launch this driver assistance software in China, one, like you said, is this big mapping and navigation deal with Baidu. And the other is clearing this data security approval. They're actually the first foreign automaker to do that. And so that just really erases some of the previous questions about data security in Tesla. There were some reports before about how Tesla cars weren't allowed into government compounds, things like that. These two things show that the government is saying we endorse Tesla, and now they can move toward launching this FSD program.
So I think the term here is in principle approval, and there may be some other conditions, obviously, that we're not aware of. One of the things that I think of when it comes to driver assistance technology is the combination not only of the use of LiDAR, but cameras as well. And I think this was something that Beijing was very concerned about, that in the process of using these vehicles on the road, autonomous kind of self-driving, full self-driving, that the cameras are capturing data, and the government needed assurances that that data wouldn't be used inappropriately. I mean, we're probably not at that point completely, although I don't know. Would you care to weigh in on that?
Yeah, that's exactly right. I mean, I think that's why this clearing of the data security, data privacy hurdle was so important. Of course, we don't know the exact details of what this will mean and what its deal with Baidu will look like, how it would actually, roll out FSD. But what we do know is that the government is saying you have cleared the most important industry standards here for data. Data, as we know, a huge issue. Actually, just a few months back, Tesla had to take to their official Weibo account to say, we localize all of our user data in China as part of Chinese data privacy laws that were rolled out in 2021. So they've always been actually quite ahead of the curve compared to other foreign companies when it comes to securing their data and saying they will localize all of that in China to address some of those concerns that you mentioned.
On some of the non-business angles, Sarah, is there a political element to this? In particular, China wants to show the U.S. that, it can make some concessions. Is it expecting concessions, say, then on TikTok?
Definitely. So a lot of people have noted that it comes at a very interesting time. Obviously, the U.S. Congress just passed their TikTok bill. Biden signed that into law. So while the U.S. is moving towards restricting a Chinese origin app there over data security concerns, China, it seems like, is making some concessions or at least showing a little bit of flexibility for a U.S. car maker. But so that's why a lot of people are interpreting this as like Beijing signaling we are pro-business. They've been doing that over the past few months, trying to say we're open to foreign investment and to foreign businesses, and this is part of it. Whether or not that would actually move the needle in terms of, the data security tensions between the two countries, that's a different story.
Even with this, this approval or in principle approval, it's not clear that Tesla's going to have an easier time selling into the China market. I mean, there's some very, very tough competition when it comes to EVs.
Definitely. We've actually been seeing them sort of lose market share to some of the big Chinese EV stars, BYD, for example. And even if they do actually pass the final approvals to be able to deploy this system, it's still different from what Chinese homegrown automakers can offer. They can offer advanced driver assistance systems, whereas Tesla's system would still be not fully autonomous. It's just a driver assistance software.
All right, Sarah, thanks so much for taking out the time to be with us here live. Sarah Zheng, Bloomberg China technology reporter. Joining us now on the program for some discussion of markets is Hebe Chen, market analyst over at IG, with us live here on the program. Well, let's talk first about the macro, I think, Hebe, because last week we had investors getting pretty ginned up on earnings, and that sort of trumped the macro. But it feels like this week we might be swinging back to a little bit of angst over higher for longer rates. Of course, all of this gets discounted in markets, but what do you think's the primary input at the moment?
Well, yes, you're right. I think this week, the FOMC meeting, what the Fed would say was definitely a crucial point to watch. And in the past couple of weeks, the market has changed the expectation quite substantially from the previous meeting. So this is probably the time that we're likely to consolidate whether the expectation is moving into the right direction or whether there's a room for the Fed to move.
I think it's fair.
Above that.
Hebe, don't you think that Powell is going to make a kind of a hawkish pivot here? He has no choice given some of the readings that we have seen on inflation.
I think a hawkish pause is, for me, is almost certain. That's something that he will say. But I think one of the key watch point for me is definitely, as you say, what's his view on the inflation? If you will remember in the past meetings, I remember one word that impressed me is that he's saying the inflation in the January and Fed was just a bump. So I think I will be quite keen to know that how he going to describe this time for what's happening in the March, the data from March, whether or not he is seeing that this is just a bump or is part of an uphill. I think that's one of the critical watching point there. But of course, what the implication from his view on inflation is whether or not that he will revise down the chance for a rate cut. Now market is expecting one cut, but not yet to thinking about even potentially a rate rise. So I think that's a uncertainty that everyone will be just keeping their eyes on.
Yeah, it's an interesting time here because, as mentioned, you've got a lot of things to consider. You're getting some interesting announcements on the earnings side, which we mentioned. And of course, it does seem like the Fed has to turn a little bit more hawkish here. And some will welcome that and some may not. I suppose it depends on what sort of company you're in. One of the interesting things, too, is with the earnings, we're starting to see third derivative gainers now in artificial intelligence. The chip makers came first, and then you've got the use case consumer and enterprise companies, and we saw that last week with Google and Microsoft. And now utilities and HVAC firms are gaining on power generation and data center cooling for this whole AI run. Is that something that you have to kind of factor into your thinking now about how this is spreading, and is spreading pretty quickly?
Yes, absolutely. I think that what you just described is a sort of broadening rally across the AI sectors. Yes, this is such a huge story. Not only the application that everyone knows, for me, the ways like Microsoft, OpenAI, that will benefit, but down to another part of the value chain, for example, the chip industry. For example, you're talking about the electricity because the AI tends to use much more energies compared to the previous version of the internet system. So they are the one that will also benefit as well. And yeah, talking about the earnings this week, we have the Amazon and Apple. I think that all eyes will also be focused on what sort of AI story they're going to tell the market. We just purely from the comparison from last week's Meta and Microsoft. And you can definitely know how important an AI story means to the market now. So I think you are right that the market is putting the enthusiasm about AI is definitely still quite hot there. And it's a challenge for the companies that how they're going to tell the story to the market and impress the market and its shareholders.
Yeah, we're hearing from Samsung today. Earnings surged. A lot of the semiconductor business is benefiting from AI, so much so that the business was able to return to profitability for the first time since 2022. Do you think there is still buying opportunity in a name like Samsung, or has the market kind of gone into so much enthusiasm where some of the chip makers are concerned that you'd be a little worried about levels of valuation?
Well, I'm absolutely thinking that the semiconductor chip industry still have a huge potential for the AI because unlike the end application for that, they are the one that for this stage, they are the one that we're pretty much 100% sure they will benefit because that any AI applications, cloud services, they will need chips. Samsung is a bit of a different story because we probably heard about terms about Korean discount. So for the Korean player, they do have a different games, but we do also seeing quite a lot of catalysts is happening in the Korean market as well. So I think if you just point to the Samsung specifically, I think they do have quite a good potential after their turning profitabilities, and their technology advance will be another one that will definitely attract more eyeballs from the global landscape.
Yeah, one of the things that interested me most with Samsung was, obviously, return to profitability in the semiconductors was great, but also that the smartphone business was pretty buoyant. The majority of the first quarter operating profit actually came from the smartphone business unit, around about 2/3 or so of operating profit, and there seems to be some signs that there's a little bit of a pickup there in that space. Do you buy it, or do you think that it's still troubled, when you look at PCs and smartphones?
Well, I think, you point to the smartphone. Yes, if we were looking for example, the Apple share, the sales in China has dropping quite substantially, meaning that as you write, the demand for the smartphone is getting to hit a bottleneck. That potentially because the external environment, the inflation, people feel the squeeze from the surging life expenses, which prolong their use for smartphone and reduce the demand. I think that could be a temporary or the short-term catalyst or short-term the headwind for the smartphone. But I think in the long-term wise, that when this tide changes, I believe that the demand will be coming back. But now, of course, in the short term, I think in the next 1 or 2 years, definitely we were seeing the demand for the smartphone, for this, the electronic devices will definitely hit quite a slow growth phase.
Hebe, I want to get your sense of the EV market before we let you go. Over the weekend, Elon Musk made a surprise visit to China, and while he was there, he received an in-principle approval from Beijing to deploy the driver assistance system that Tesla has in the China market. When you look at the EV space broadly, how are you feeling about it?
Well, yes, I think that's a big news, as you put it at the beginning of the program. It's a big game for the Tesla, and I think this EV is sort of the center of the tension in between the U.S. and China. And for me, I think it's a flashing sign for me that China is trying to change the game to play with the U.S. restriction there. Of course, also they claim about overcapacity, and you can definitely tell that China trying to restore its reputation as the most important market of the world by welcoming Tesla more into their market. But on the other hand, we know that the competition, the future for Tesla won't be easy because there's so many players from China and with much cheaper prices there. So it's a big game for Tesla, but the game is now getting into a different level.
All right, Hebe, so much to talk about today. We didn't even get much of a chance to get to the end. That's ahead. But Hebe, thank you for joining us. Hebe Chen, their market analyst over at IG.
We've got earnings from Samsung today. Net income much above forecast. The figure is 6.62 trillion won. That was nearly a trillion won ahead of estimates. Let's take a closer look at what's happening with Samsung with Robert Lee, Bloomberg Intelligence senior analyst, who joins us from Hong Kong. What jumps off the page here, Robert, so to speak, is the semiconductor index returning to profitability for the first time since 2020. This really is the AI story, is it not?
There's an element of AI in it, and within the semiconductor businesses, there are three elements. The two largest are the NAND flash business. So NAND flash is the temporary storage used in smartphones, and for those who are old enough, the digital cameras, if you remember those, with little flash memory inserts. So that's a major driver, and it's a notoriously volatile industry, which is driven by very volatile pricing, swinging from highs and lows depending on the outlook, demand and supply outlook. That's one element. The other being DRAM, which is driven by the mainstream PC industry. But on top of that, as you've mentioned, you've got this new element of AI growth. So incrementally, that is coming in and driving some incremental demand. So what you're seeing at the moment is a pickup in PC demand with restocking, a pickup in smartphone demand with restocking, and this additional element of AI demand coming in on the top, hence pushing that business into profit.
You told us last week in our interview, and Vlad Savov mentioned it as well, that Hynix had taken a lead over Samsung in HBM chips. And the importance, obviously, of those types of chips for AI is well known. Anything in this report that suggests that Samsung is regaining that lost number one status, or is it still Hynix?
I think for the moment it is still Hynix, and as you said, they reported recently anyway, so the strong momentum on the high bandwidth memory or HBM business. But Samsung is the world's leading NAND flash and DRAM company. It's a company with huge resources and I would say a very pointed and aggressive approach in general to everything. So Samsung is absolutely doing it all it can to narrow the gap with Hynix. So there's some initial evidence to support that, but still Hynix has the lead at this point, and that will probably remain the case through the rest of this year, I think.
So what does Samsung do to close that gap? Is it about CapEx spending? Is it about R&D? Is it about making sure they're at the tip of the spear, so to speak, when it comes to these most advanced memory chips?
Yeah, I think this time Hynix was ahead of the curve in terms of putting in the R&D dollars early, in foreseeing the opportunity in the same way that NVIDIA was, well ahead of any of the other mainstream chip companies. So that's the main reason why Hynix has got the lead at the moment. Samsung's playing catch-up. They need to invest more heavily in R&D, and I think over time they will narrow the gap. So you're more likely to see a two-horse race and possibly even a three-horse race as Micron, the remaining domestic U.S. DRAM supplier, is also trying to get a piece of the action there.
Now, one of the other interesting areas was that the first quarter operating profit, the majority of that actually came in the unit that produces the smartphones. That seems kind of interesting. Does that in itself suggest that the smartphone business is coming back, or is it too early?
Yeah, well, so the major laptop and smartphone companies have all launched AI-enabled devices where you can run simplified large language models actually on the device. They were all launched at the tail end of last year, early this year, and are expected to drive demand through this year. So Samsung's obviously benefiting from that, both on the memory side, as we've discussed, and also within their smartphone business. But at the end of the day, I think the key risk here, just to inject a little bit of caution, is the sell-through. This is all dependent on consumers going out and buying these new devices. And that is typically, loaded on the second half of the year. So we'll still have to wait and see on that front. But it's all looking good for them at the moment. You've got three major drivers within Samsung's business, cyclical drivers coming back on track.
So it wouldn't surprise you if on the revenue side there was a lot more volatility, let's say, in the third and fourth quarters of this year.
Absolutely. I had the pleasure of covering Samsung as a sell-side analyst several years ago. I think the core of Samsung's business is relatively stable. The white goods business, the TV business, the smartphone business to some extent. But then you've got this overlay of very volatile profits, volatile businesses on the memory side, as I said, DRAM and NAND flash, which when things are going great, there's huge operational gearing, and this company's in inverted commas, printing money. Equally, when we're in a cyclical low for those businesses, it can really depress profit in the business. So what we're seeing at the moment is demand coming back on this memory side and driving profit for the group overall.
Well, that's good news, I guess, to some investors. A quick question on Tesla, because the other big story that we're covering this morning, so we're talking about in-principle approval. I assume that means that Tesla faces kind of conditional status on this self-driving system in China. So is this kind of a gesture by China, or is it real?
Very good question. That's why you're asking the questions, not me. No.
Yeah.
Well, I think like every country, you've got, every country looks after its own, doesn't it? And China's, rapidly narrowed a gap on the EV space. And, you've got the likes of BYD and Li Auto as examples who are, dominating the China market and also very aggressive overseas. So opening up to Tesla is definitely a positive for sentiment, is incrementally positive for Tesla. The question is, what real success will they have there?
Robert Lee from Bloomberg Intelligence joining from Hong Kong.
This is the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen. And always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.